Are we getting ready to get a dead cat bounce in this market? What gives? It just seems like day after day after day, we're getting this relentless selling. We're not seeing major gaps lower. We're not seeing panic selling. We're not seeing even really above average volume. It's just a slow drift and drip to the downside. So where does it bottom out? There's a lot of indicators out there that are suggesting we are extremely oversold here in the short term. Now, I do think that we're probably going to go lower into the end of the year, but I do think that we are well overdue for a dead cat bounce of some kind. Maybe it only lasts a couple of days, but there needs to be some kind of a relief rally to be able for people, one, to cover their short positions, and two, to provide better entries to the downside. So before I get into that, and we're going to be going over the SPY, we're going to be going over the Qs, we're going to be going over the IWM, and I'm going to be covering all your questions. So make sure to be posting your questions and your stocks that you want me to be covering. I'll look at all of them and get through each one of them here in this live stream. Also, make sure that you're liking and subscribing to my channel. That really helps me out quite a bit, guys. I can't express enough how much that means to me when you guys are able to do that. So make sure to like, subscribe, hit the notification bell thingy, and yeah, just keep helping me out that way. So Qs down 1.2%. We have SPY, it was down 0.8%, and you had the Russell 2000 down 1.3%. What does that look like on the charts? We're going to start off with SPY first. Here you have this rising trend line. We talked about this rising trend line going back to March. It hadn't broken it yet. The last update that I did. The last update, we were sitting right on here. We were in this declining channel in the short term, almost looked like a little bit of a bull flag pattern here where we could have bounced off and perhaps broken to the upside. But since then, the last two trading sessions, no relief in sight. Has went right through that like a hot knife through butter on this trend line. And it's also broken below this bull flag or declining channel in the short term, however way you want to look at it. So it's broken below that. We're starting to see a little bit of an increased volume here as well. And then you got this price level support. This is the next level that I would be paying close attention to from a price level standpoint. And then on top of that, you have this rising trend line that's pretty much fallen out just underneath it here. So to the downside, there could be a lot more headaches for this market going from 436 down to 420-ish. And if that's the case, that's about another 4% of downside. I don't think it can do that without getting some kind of a bounce in the near term unless we just have a complete panic flush either tomorrow or Monday. Again, like I was saying, you're not seeing a lot of gaps on the charts. I mean, these are pretty much days where we're either opening flat or higher, and then we're drifting lower for the entire trading session. And I think over the last 12 trading sessions, 9 of them have been lower. So definitely oversold, definitely looking for an oversold bounce at this point. May not even last but more than a couple of days to a week, but nonetheless, we want to see something to be able to get us off of these oversold levels. We've seen the stochastics here, and it's not a reliable indicator of when it's going to actually bounce, but it does give you an understanding of how oversold the market can get. And on the stochastics, we've been oversold since August 4th. And we're sitting now at a reading of 1.75. So extremely, extremely oversold. Do I want to be shorting here? No, I don't. And I was shorting up until last week. Yes, I wish I would have been holding my shorts into this week, but based off of the choppiness and the indecision that we've seen in the market of late, it didn't make sense to me. So I closed it out for a small profit last week. But looking at the Qs, and we'll get back to the SPY here in a second because I also want to do some Bollinger overlays with you too. On the Qs, we're testing this price level support here at 357, 358. That needs to hold tomorrow. If not, then we're looking at a test of this rising trend line here in the near future. And that would be a pretty significant sell-off if we start going down into like the 348s. That's another 2.5% to the downside. And if that can't hold, and let's think about this for a second. If that can't hold and the S&P 500 starts to make that 4% move, then you're starting to open up the conversations for a pullback down to this massive trend line, which is around 319, 320. And I'm seeing you in there, Alpha, Oscar, and Swipe 650. Great to have you guys in here. So in the near term, what we want to see, can we hold this 358 level tomorrow? If so, that provides a decent bounce, possibly back up to this 373 level. That would be about a $15 bounce or about a 3 to 4% rally. To the downside, If we break this level, then we want to see what happens with a retest of this rising trend line off of the January lows, because that is definitely back in play if that happens tomorrow. And then finally, this big price level supported around 320. Those are the big plays that and price levels that we want to be watching for on the Qs. IWM, rising trend line here, right off of the May lows. That's been broken. We were talking about it possibly holding on Tuesday. It closed right on it. Now we're getting a definitive break to the downside. Now we're talking about a move down to 180, 183. So I think really before we get a bounce, the max pain in this market, and granted, I can always be wrong on this stuff, okay? Max pain for this market on the Qs would be this rising trend line there. And on IWM, it would need to be around this 180 level. So you're talking about a 1 to 2% move lower for those two indices. On SPY, it's not as clear because there's not as much of a concrete price level. You could say maybe we come back down to this 431 level, which is sitting right there at a previous higher low. But that can't really be counted on to offer up support because there's just not a lot of price point data there. And then we've got the VIX. And we've seen so much of the bears crush some volatility. It was like 7 out of 8 days where it was getting crushed. But over the last 3 days, that's not been the case. Instead, it's been continuing to rally off of the lows and pushing higher. So yesterday, we're down 2.8% on the VIX. Yesterday, at one point, we're down 2.8%. And then by the close, we were up 2.8%. Today, 6% drift to the upside. What is causing a lot of this stuff? Why is all of a sudden we are just going lower? Look no further than TLT. This is your bond ETF here. And you can see here, the bonds are getting cheaper. And as a result, the yields are going higher. So when the yields go up, the price of bonds go down. That makes it to where there's a lot more people willing to go into bonds as a safe haven because of the kind of yields that they're returning. I know people right now, they're getting like 5.5% on some of these bonds and bills. So you want to keep that in mind. Volume is starting to get a little bit to the extended on TLT, like the Qs, like SPY, IWM. You see a bounce here, especially after drifting lower for a 6th consecutive day. These are big moves for bonds. You could very well see a bounce in the very near term. That should help SPY, the Qs, and IWM as well. Looking at T2108, 31% of stocks trading above their 40-day moving average. That's getting very extended considering that just earlier this month, we were sitting in the upper 60s, and late last month, we were sitting in the 70s, considering a move up to the 80s. So it's getting very overextended to the downside. Again, I think we can still get all the way down to the single digits at some point this year, like what we saw back in October and June and May of last year. But for this kind of a move, usually it warrants a bounce back in the opposite direction of some kind. Now, let's look at the Bollinger Bands. I'm going to put this overlay right on there. One of the things we haven't seen too much of late is these Bollinger Bands to the downside. This is let me give you a better color on this thing so it stands out a little more. We'll put, I don't know, we'll add it like a white color so you can see it clearer instead of the dark blue. But these white Bollinger Bands. We closed below them yesterday. We closed again below them today. This is something that we haven't seen much of over the course of this year. On SPY, the last time we saw that was when there was the regional banking crisis. We closed below it one day, just barely, but it ended up marking the bottom of that whole event. Now, we also saw some back in December of last year where we closed below it for 2 straight days before we got a bounce. So we're starting to hit that point here where it would make sense for us to see some kind of a bounce just off of the fact that we're so overextended even on the Bollinger Bands. Same thing can be said about the Qs. With the Qs, not even during the regional banking crisis, and it wasn't really affecting tech stocks for the most part, but nonetheless, we didn't close below it back then. You'd have to go back to December of last year, the last time we had to close below the lower Bollinger Band, and that would be December 19th or December 20th, actually. So December 20th was the last time we closed below it on the Qs. Now we're looking at it for the first time here today. That's a significant move as well. On IWM, way below the lower Bollinger Band for a 3rd consecutive day. So again, these moves are getting very extended. The stochastics on IWM, It's 0.4. So remember when we talk about being overbought and it's sitting like at a stochastics reading of like 99.8 or 99.6? That's what we're seeing here with the stochastics, but exactly to the downside. So you have to go back again a pretty long ways here, back to the March regional banking crisis where we were closing below it. So we're hitting those kinds of desperate levels in the market to where a dead cat bounce would seem like it's in order. All right. In the chat room, we have got Alpha, we got Swipe, we got you guys asking questions. We got Kevin from Lakeland. So it's good to see you guys. If you guys have any questions or stocks that you want me to look at, make sure to post them there and let me know what you guys got. So, all right, let's look at PFE here. Go ahead and bump my head up a little bit. There we go. What do we got with PFE here? Let me go ahead and get rid of these Bollinger Bands because God knows we don't need anything else on here. There we go. All right. You got a little bit of a double bottom that could be forming there. It's not what I would call a perfect double bottom. Talking about these two things here. The more important part is the fact that it's trying to create a higher low, a very marginal higher low. That's why I kind of still call it a double bottom. It's trying to break out of that basing pattern right there. That's going to be significant. It's kind of choppy with some of these shadows. So on the upper ends of these candle bodies. So it needs to get some follow through tomorrow. It needs to push it back above this 50-day moving average. The healthcare stocks as a whole have not been that great of a place to be. It's shown some life here in the recent days. Or I shouldn't say recent days, but about the recent weeks. But overall, it's been very choppy and sideways. I mean, this is not really a sector that I've really wanted to trade or invest in lately, just because it's just sideways. It's not going anywhere. It's not going down really. It's not going up. It's just existing. But PFE, even if it gets you a pretty good move here, you want to be cognizant of some of this resistance overhead here. That's at 42. If you can get it up to 42, that's great. I mean, you're talking about a 10+% move, maybe about 15% move to 42. That's not bad at all. You also have some declining resistance here, which again, if you could get it up there, that'd be awesome as well. So what we really want to see is this lower high get taken out. That would be above 37.80. That would be the first big move to take place. It would also get it close to filling this gap, because I don't think we filled this gap last time. So this gap right here still needs to get filled. If you can get into that gap and fill it, that's also another positive too. So with PFE, there's a little bit of something there to work with. I mean, it's not dead in the water or anything like that. It's had its share of lumps over the course of this year. That's for sure, going from, the 50s down into the 30s. But this little basing pattern, there may be something to it there. You got to remember though that it had a little bit of a basing pattern right here in March, and it looked like it was going to do something, and then it completely fell apart. So using stop losses is going to be very important with something like PFE, in any stock for that matter. Shoot, I use them on everything I trade. Really liking the videos and frequency of them. Crack that algo. I tell you what, I think one of the things that hurts me on YouTube is the fact that I'm pretty honest with you guys. I don't do the crazy videos promising you everything under the sun, or that it's even achievable. I think that we have to be realistic with what we try to do in the stock market. We got Kevin from Lakeland. Let's see, Medtronic, MDT. I haven't looked at this one in a long time. And Kroger, please, looking to add these positions at this point. Here, okay, let's look at MDT. And what do I see here? And then I'll do the Kroger one after that. All right, let's just get some perspective on it. Let's look at this weekly chart here. I mean, incredible run up here. Let's look at the monthly chart. And sometimes it's good to get kind of a big perspective on it, especially if you're not overly familiar with the stock. You got a rising trend line here, going back to, 94, 95. Some of you guys probably weren't even born then. But looking at the weekly, I don't think that's anything to really concern ourselves with at this point. I mean, if you get a significant sell-off in the market here into year end, yes, 50s become a possibility. And gosh, that would be amazing to be able to get, a position at that level there, because that would be really lows that haven't been seen since 2013. So not bad at all. Imagine if you could get Apple at those levels. All right, so here we got some resistance at 91, trading at 82. So that's about 10% of upside before it runs into some heavy resistance there. Let's see, do we have any other layers that we need to be concerned of? Maybe a little bit. I mean, it's almost converging at that point, but they could separate in the coming days, these two resistance levels. Excuse me. But yeah, you got a trend line here in the short term that's broken down some. That's not the best look. I think this is going to be a key support level going forward. You can see where it bounced off of it today, essentially bounced off of it back on August 8th. So that 81 level is going to be essential for it to hold. It's sitting right on it though. And then if it does give you a bounce, it's oversold. You want to be cognizant of this rising trend line that had previously broke at 87 and then the resistance at 90. What else you got here? Kroger. Definitely some resistance there just below 50. You're talking about 49.80-ish, and that's going to decrease with each passing day. Where'd that chart go? There we go. Look at this, man. You got almost like a narrowing channel there using some technical analysis. So essentially since September, October of last year, it's gone nowhere. It's not done anything for us here. It's just kind of trading sideways. I think, you know, for me, from a trading standpoint, if I wanted to get into this stock inside of this narrowing trading range, I'd want to get in probably around like this 44, 45 level if it can bounce off of that area. If it can do that, then at least you have some ability to run this thing back up to 49 for about a 10% profit before you start running into any heavy resistance. Right here is kind of no man's land at 46. You can get up to this 50 and you start bogging down there if it gets tested. Preferably, I'd like to see this thing break out at 49, say essentially about $50 a share. It breaks above $50 a share, you could see a breakout as a result. If inflation starts to kick up again, you could see that also. And it is kind of kicking up. Has it ever really subsided? I don't think so. But overall, a good chart, though. Can I look at DIA? Yeah. So the reason why I don't do analysis in general on DIA all that much, I don't fault anybody for trading it. It's not my cup of tea because it's a price weighted index, not a market weighted index. So stocks, I think the biggest influence on DIA is United Healthcare. The second one I think might be Home Depot. Apple is a little bit further down on the list. I think it has the sixth biggest influence, despite the fact that it's a $3 trillion company. Same thing with Microsoft. It's much further down the list. Goldman Sachs is also one of the big hitters on the Dow Jones. So it weights the index based off of the price of the stock instead of the actual size of the company, which can really give it some funky. That's why sometimes you see like the whole market down and you got DIA soaring. It's because like UNH and Goldman Sachs happen to be rallying like 3 or 4% that day, and it's essentially holding up the Dow from falling apart. And I've seen it to where you get like 25 stocks to the downside on Dow, but you got like the 5 biggest ones rallying, and that's enough to keep it green. So you can see some pretty wonky stuff with the Dow. Here you go with rising trend line here. This one could be tested in the coming days. We haven't really focused on too much with the Dow, but there is a rising trend line right there. And if you're hearing like a lot of noises in the background, I don't know if my microphone's picking up on it. It's right here over my head. It's because the lawn people decided to come out and cut grass right outside my window. So wet grass, for that matter. Very wet grass. They're running their machines all over it, leaving some tire marks there. So fun stuff. All right. So what else are we looking at here with the Dow? You got some rising resistance here. So almost like so when I look at bearish wedges, I usually like to see a bearish wedge look kind of more like this, where it's a little bit more steeper, more narrow, where this is flatter and this is like extremely steep and difficult to hold on to. You're not getting that same. I don't feel like that's about it the same. This is a little bit steeper here. I mean, if you compare this line to that line, much, much more steeper. So I like to see those bearish wedges a little bit steeper. You're not getting that to the same extent, but it is offering some resistance here. So some people are going to start talking about, I think this is more like an ascending triangle pattern. It's just that this little resistance level isn't as flat as I would like to be. It's like a in between, I would probably say. So yeah, watch this rising trend line. See what it does here with this 344. If it can bounce there, then you got resistance right here at 357. And in terms of it being oversold, yeah, it's oversold too. Again, stochastics readings at 2.76. If we put the Bollinger on there, we probably got some weak readings there as well. Yeah, it's way outside that lower Bollinger Band. So not too hot. And if you're frustrated with this market, I'm in the same boat as you guys here. I've only made 5 trades this month. I made my 5th trade today. Got into Google in the breakout. The market looked like it was finally going to bounce, and it didn't. You can't control the market, and it can really frustrate you sometimes when it just doesn't go your way. But that's what happened to me today. Moderna. This has been popping up a lot lately. A lot of people have been asking me about Moderna. I know we're hearing about the COVID waves again. I've seen a lot of talk about, there's another round of that coming or whatever. I don't know how many more people they can possibly poke at this point, but heavy resistance right there at 120. That's what you're going to want to be mindful of. It's trading at 106 right now, so there's some room to run. But if you were to get in it right now, or if you're already in it, be mindful of this one resistance at about between 118 and 120. That could be a big problem for it going forward. That's a heavy layer of resistance. Shows up on the weekly too. Maybe even shows up even more so on the weekly. Good grief. That's a big resistance level going back to the beginning of 2021. You want to be mindful of that. I mean, it's broken that decline trend line, so I guess that's a good thing. But overall, I don't know. I don't trust those things. They can go really against you, man, on some of these biotech plays that are related to the whole outbreak. Let's see. I looked at the Dow already. The DAX, I don't know if I can pull up the DAX on this. Let's see. I haven't done TA on the DAX in a long time. Let's see if this one works here. Guess I got it on here. All right. See, this is going to be a clean chart. I actually did do it a long time ago. Holy cow. When was that? Back in early 2022. Okay. It's been a while. Only so much you can track, right? All right. So going to this, I got to get familiar with it again. Holy cow. For those who don't know, it's like everything is opposite on TradingView versus TC2000. Doesn't make it worse or anything. It's just when you're switching back and forth between the two, that can make it pretty challenging. So the DAX looks like, gotta get familiar here with the controls. Looks like you could have a little bit of a topping pattern that's forming on the DAX here. You definitely have some resistance in place. I'm just trying to see where that's at. I could say that right there, but then you got this outlier where we broke back below it. I mean, that's not uncommon to see something like that. But I think for the sake of, being conservative, I would say watch out on the DAX if we start breaking below 15, or basically 15,500 is where I would start getting nervous if we break below that. Heavy resistance overhead to be mindful of. Let me get back my TC2000 here. Thank you very much, man. I appreciate that. Annie, you're from Portugal. That's even more incredible. I just learned about Portugal. I was reading about the church history this morning before the market opened in Portugal. Gosh, I forgot what it was now. I think they were started like in the 1100s. So I didn't realize that. But yeah. MDT earnings on 8/22. Appreciate that. Yeah, we definitely don't want to be holding stocks through earnings. That's where you can get yourself into a lot of trouble. So what do I think of UPWK? It's been holding steady at the earnings gap. Let's look at that one. All right. A little bit of a basing pattern there that's going on. Yeah, we might want to change that to a daily chart there. That's a lot of volatility to be looking at a weekly or a monthly chart. It's not bad. I'm just trying to get a feel for the, the overall chart here. So you got this breakout here, and it seems to be holding it pretty well so far. Yeah, I think it's worth adding to the watch list. I think you want to be mindful of the volatility that's associated with UPWK, but overall, you got a bull flag pattern here that's formed, pretty well developed bull flag. And if it can break out, above 1432 and the market can support it and you can get a good run into industrials again, yeah, there's some potential for that trade to start pushing ahead for you there. I like it. I'm going to add it to my watch list. Not a bad chart at all. And then Tesla. That's the last question. All right, let's go to my other chart here on Tesla. So this is okay. Head and shoulders right here. Left shoulder, head, and then this is the head right here. And then this is the right shoulder. It broke it below. It played out very well. Then it got back above that neckline from the old head and shoulders pattern. Now it's breaking below. I honestly think this we can trash this at this point. It's breaking above it and below it with no discretion at all. So the chart doesn't care about it. I don't care about it anymore. Rising trend line. I think you want to look at this 207 level here. That I do think that we could bounce before then, honestly, get a few percentage points out of that. But ultimately, where I'd like to see this thing go down to is this 206 and see if we can't get a hard bounce off of that and potentially play it back up to the upside there. So that's a bounce play waiting to happen, but it needs to get back down to this trend line. Right here, it's like catching a falling knife. Down another 4% today. Beginning of this week, it was trading in the 240s. Now it's trading at 216. That's a 10% move. That's pretty significant. So, and then we got to see. Have you heard of BRICS? It's where other Brazil, Russia, and some other countries trying to get away from the dollar. Do you have an opinion on it? I mean, a lot of people have been talking about the dollar as the world's reserve currency going away. They've been talking about it for goodness, probably as long as I've been alive. And honestly, the way we've devalued the dollar over the years wouldn't surprise me, or not that we don't probably deserve it, but I mean, probably if we go away from it, I think that's where you're going to see probably a digital currency, Federal Reserve come out with their digital currency, and that's probably what will happen next if we go off of the dollar as the world's reserve currency. Forex is not my specialty, but I can sometimes weigh in on stuff like that. Looks like MPW confirmed their divvy. They probably need to. I think shareholders were probably sweating that one because I think a lot of people are in it because of the divvy. So the fact that they were able to do that, that's a good boost for the stock, 6% to the upside. But I mean, that's really is that an after hours move? It sure is. Yeah. So that's good. That'll probably be good for the stock tomorrow as well. You also have some support right here. I own some MPW. It hasn't been fun from a divvy standpoint, but yeah, I mean, you got a major support level right there. That's at about 730, trading at 784. So you're getting a good bounce there. Maybe it can take a little run back up to this gap here that's been unfilled. That would be a significant move. So, all right, guys. Looks like we've run out of questions. So the wrap up of what we're looking at in the markets right now, what we should expect going forward. Yes, very oversold, very overextended. I think you're seeing a lot of the zero DTE stuff that we saw to the upside when nobody was really caring about that from an institutional standpoint or from a political standpoint. Everybody was loving the zero DTE call buying when it was pushing the market higher. Now you're seeing the reverse of that. You're seeing the zero DTE put buying. That's why you're getting that consistent selling. And it's like relentless, and it's happening during regular trading hours. You're like, holy cow, we don't even bounce. Well, if you remember, that's the same thing that we saw when the market was marching higher. There was just a consistent bounce or a move to the upside that was just completely relentless. And now we're seeing it to the downside. I can tell you this. People will start to notice that the market starts to give up a lot of gains because of the zero DTE, and that's where you start to see regulation come out for it. So keep that in mind. All right, guys, it was a good one. Good talk. Take care, and God bless.